Thank you, Mrs. Piper, and good afternoon to everybody. Okay, my name is Karim Bertrand, and I'm very pleased and humbled and privileged to be representing the Credit and Business Development Department, affectionately known to all of you as the Loans Department. Now, my purpose here really is to explain how National Bank is responsible or fits into this whole home ownership process. So you would have heard from technical people, engineers, architects, and then we lightened the financial side and spoke with the insurance companies. So now I'm here to talk to you about the National Bank. For many, many people, banking or approaching the bank is probably the most painstaking or anxiety-causing process or part of the home ownership process. Now, we are all familiar with the Three Billy Goat Gruff story, that fairy tale where the goats were trying to cross over the bridge, but there was the ugly troll underneath the bridge. And for many of us, the bank is that ugly troll that is preventing us from crossing into the pathway of our happiness. So today, I'm really here to hold your hand and take you across that bridge. Fortunately, there will be no ugly trolls, and we will have a happy experience in the end. So to start off, I am originally from the community of Newtown. I see a few of my Newtowners here, my Charlotte Villas. And I had the privilege of being raised by extended family. Now, my grandfather, before he died, he had his home in Fortney, which is a little bit above the hill from Newtown. But in 1965, he was married and a proud father of 10. And he was the tenant of a very happy boot sham, as they called it, in Citronia. Now, that two-room apartment had to house his wife, his 10 kids. Now, my grandmother was from Pishley, so when her relatives would come from Pishley, Granby, to go to school in town, that was the house they get the little lodging. And my grandfather's family is from Soufrière, Scott said, so of course, the same would be extended to them. So the house of 12 sometimes was a house of 50. And I would say to him, you know, how did you do it, you know? How? And he said, Karim, I'm not sure about the how, but that motivated me to get my own home. So in the 1970s, he built his home in Fortney, which is still there to this day. Not the prettiest of buildings when you make that big corner in Fortney, but still, he's hard earned his sweat and just to give a backstory, my grandfather was educated up until maybe the primary school level. So for him, having that home was a big deal. For you, it might be something else. It might be a different motivator. It might be to leave something for your family. It might be to move up to the east side. But whatever it is, we know that home ownership is something that a lot of us will take a lot of pride in. Today, we will touch on four main things. We will talk about the process in preparing, what you do before, the application process, when you have to come to us and sit with us, the advantages of home ownership, and then we would speak briefly about what NBD is offering right now. So, by virtue of the fact that you are here, some of you might be existing homeowners, or you might be considering taking a mortgage. So what should you be thinking about right now? The first thing, like Mrs. Piper pointed out, and I think Mr. Edwards touched on it, is that a home is a very significant investment. And for many people, you only have one chance. There are no do-overs at a mortgage. Very hardly do you have someone say, oh, I had a bad mortgage, let me go and try a new one. Like, or you can have a vehicle and decide, I don't really want the Mazda anymore, I'm going to try something else, you know? It's a very, very involved investment. So it's something that you really want to do properly and get it right the first time. The first thing you need to do is determine how much you can afford. So many people make the mistake of going to the architects, getting the lovely plans drawn up, getting the permission, doing all these lovely things, and then when they face the bank for financing, it's sometimes $500,000, $600,000, $1 million. And of course, we would love to finance those beautiful homes, but unfortunately, it might not be something that you can afford. So the first thing that you need to do before you approach Mr. Trotter and Mr. Stout downstairs and all of these people is to come to the bank, sit with us, and we can have a good discussion about what you can afford. That will inform what you would like to do. Some people, they have not seen their dream house as yet, so it is a construction from scratch. Other people don't want the hassle of having to go and build and do all of that, so they will go around, sightsee, contact the real estate, the agents, and they can buy a house that is already constructed. But at the end of the day, you know you're working for value in your mind. Be realistic. Of course, mortgages will displace us. So for some of us who've had surgery like extractions or probably an appendix removed, moving from renting to owning your home is almost like major surgery. So there are things that you would need to consider before you just decide, I would like to build a home or buy a home. So proximity to church, to school if you have children, proximity to essential services, if you have a vehicle, if you don't have a vehicle. So all of that has to be factored into the decision-making process. And people don't consider things like furniture. So you build a lovely house and then you have nothing to sit down on, no stove to cook, no TV to watch, all right? And then after you've probably expended your resources in building your home, then you have to face the hire purchase companies or the payday loans to be able to furnish your home. Whereas you could have incorporated that in the beginning so that your mortgage could include some financing for furniture and appliances. So the requirements. Now we're talking about when you actually decide to come to the bank. We will require picture identification. So of all our services, whether it's a deposit account or loan account, we really need to know who you are. So it's picture identification, we'll sit with you, your phone numbers, your email address, where do you work, how many dependents, and then your budget, why you want to know all that for, you know. But it's very important for us as your bank to know as much about you as possible. I always tell people there are 3 people in your lives who must know absolutely everything about you. Must. And that's your priest or pastor, your doctor, and your banker. Well, so that's for me. Your banker really needs to know, because at the end of the day, money is very essential to what you do in your life. And you need to face your banker with confidence, and the information really has to be accurate so we can guide you. Things when we start to go into the more technical things, proof of employment and proof of income. So the job letter and the salary slip, which is very, very standard for any loan application process. So your letter will have to state the institution that you work with, how long you've been here, the salary that you make annually, and any kind courtesies, blah, 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 regards, HR, votes clerk, PS, senior admin officer, whoever is authorized to give you such a letter. Then the salary slip will give you information like what you pay, what you receive, sorry. Of course, you must pay your taxes and Social Security, and then it will detail other deductions that you might have. Which brings us to point number 3, the credit reports. Now, these are these long sheets of paper that you sign for this bank, that other place, which really and truly is not to frustrate you, but it's to gather enough information about your financial habits to inform the mortgage process. So if you have loans elsewhere, we can even consolidate that into the mortgage. It will tell us how exposed you are, how much disposable income you have at the end of the month. So after you've received your salary, you've paid your taxes, you've paid your Social Security, then you have to pay this place, that place, the other place. It lets us know really what you can reasonably afford. So we'll sit with you and do a monthly budget. There's also something called a statement of affairs that lists the loans that you might have elsewhere, the savings that you have, other assets you own, furniture, your vehicle, your life insurance policy with cash value, these sort of things. And what that helps us to do is put, I guess, in a quantitative manner, what we can reasonably lend to you, or how much you are exposed to, or how much you're actually worth as a person, your net worth. From there, we have an idea what you can afford. So we can move to now the property. What we would need about the property you are considering: a copy of the certificate of title, a letter of intent to sell, a valuation, which is very important. So the bank can actually give you a list of people that we use, that we trust to give us credible information on the value of the property. Then we had our friends from the insurance. Life insurance is mandatory for any mortgage, as well as property insurance. So after all of this has been gathered, this is the time when you decide, okay, well, my loan is with the bank. So for many people, they say, okay, well, I have an application pending, and they really wonder what is happening. At the end of the day, before you get that decision for approval or non-approval, what do these loans officers do? Of course, they dress very nicely and they go to the offices, but I can tell you it is very, very hard work. So we sit with all of the information that you have provided, and we need to determine a few things. Your credit history. To me, it's one of the most important factors in deciding whether or not I should lend to you. Now, credit history comprises of different things. When we look at the credit reports, we try to determine how much you have in loans. How frequent do you lend? What are the sort of things that you borrow money for? From that, we can make a decision, okay, this person might be a good paymaster or a bad paymaster, because on the credit report, there is a line that says arrears or status. So if it says delinquent, if it says, if the loan amount is 50,000, but you in arrears 68,000, it means, oh gosh, you just have not paid that loan. And people probably think that keeping those things quiet, or probably doing it and neglecting it with a good reason, is enough for the bank to consider you towards lending. So I can tell you now, that is probably one of the biggest deterrents for any financial institution when it comes to lending you money. And there are people who can't afford. It's not like they don't have money. Some people can actually afford to pay, but they don't. So character is very, very important. From the relatives that you lend money from, to even the institutions that you borrow money from, you really need to be very disciplined and diligent in paying those back. The stability and security of your employment. Now, nothing in this world is certain. Before, there was the mentality or the culture of you getting a job, and that was your job for life. You move from that desk to that desk. When that person die or retire, you move to that desk, and that was your job for life. That is job security and stability par excellence. Unfortunately, we operate in a very dynamic society. So your job today might not be your job tomorrow. However, we can still gauge with a certain degree of certainty how stable your employment condition is, not by where you work, but by how marketable you are. So during the course of the interview with the loans officer, don't feel like we're asking so many personal questions. We might ask you things like, what is your highest qualification attained? Did you go to high school, to secondary, to sixth form, to college? Okay, if you're an accountant, are you a licensed accountant? If you've worked elsewhere, yes, we have a job letter from DASPER, for example, but if you've worked at Whitchurch or at this place as an accountant, it helps us to appreciate you as a marketable employee. So if today or tomorrow you lose your job and you're indebted to the bank with a monthly installment of $3,000 for a mortgage, we can say, okay, we can take a chance on this, because if this person loses their job today, tomorrow somebody else, can hire them, all right? Affordability, we've touched on that. Collateral. Now, for mortgages, that is probably one of the easiest fits for collateral because it's already there. What we are lending you money for is to build a house. What people don't appreciate, and I was happy that the insurance people pointed it out, was that there is a value that you need to work with when you're considering a mortgage. And just like the asset itself is collateral, the property insurance is also collateral, as well as the life insurance. So sometimes we might call you and say, well, hey, it's the end of the year, is your property insurance up to date? Or it's not, so probably you might have to pay it, or your life insurance has elapsed. Please go to Sagicor, to First Domestic, well, not First Domestic, but those who provide the life insurance, and bring it up to date, because at the end of the day, that forms part of the bank's collateral. So like Brenton pointed out, unfortunately, if you were to die before the mortgage was completed and your life insurance has elapsed, then it exposes the bank to a lot of risk. So in addition to the asset, the land and the house, the insurances also form part of the collateral. Your salary order also forms part of the bank collateral. So if today or tomorrow you've changed jobs, the first thing you do if you change jobs is change your uniform. The next thing you do is inform the bank that I have changed jobs, so please, you can no longer get money from this place, so make a new order for me so I can take it to that place. And we spoke about the net worth and the capital. It's also very important because we need to know at the end of the day what you are reasonably worth. If something were to go wrong, what can we liquidate? What can we share? Okay, you take one bread, I take the other bread. But we must know. If we don't know, then we cannot operate in a vacuum. So once you've met that criteria, your loan is approved. Congratulations, you are now the owner of a brand new home. Not yet. Not yet. So you are afforded a certain amount of money to do something. So the first thing we encourage people to do once your mortgage has been approved is to stick to the terms of the mortgage. And I think Mr. Trotter spoke a little bit about that when we give you a loan. And remember, at the end of the day, the bank is as interested in the home as you. We have the invisible keys. You have real keys, we have invisible keys. So you've been approved to build a 2-bedroom, 1 bath, 1 this, 1 that. and we come on site and then we see a veranda upstairs and a balcony there. Please, 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 if you receive approval from the planning division, you have your surveys, everything, your bill of quantities to build a particular size house with dimensions, stick to that as much as possible. People seem to think, and it came up last year with Mr. James when he spoke, he says every square inch that you do additional that has deviated from your plan is money. And then you find that before the house can be completed, you don't have enough money. So you get into cost overruns, or there's not enough to complete construction, and then you have to face this again. Which we don't mind, but it can be a bit inconveniencing for you because then it would have delayed your plans. So stick to the plan. Of course, speak with your banker, your contractor, your surveyors, your architects, your engineers, all along the way. And don't be scared if from time to time we come to see if you are building according to plan. Once it's been approved, please stay away from the bad debt. A lot of people are in the honeymoon phase of their home. So after they've built their home, they decide the next year they want to take a vacation to Hawaii. And then they go to the same institutions that we probably would have advised them not to go to so quickly. Remember I said your mortgage is like a major surgery. So after you've had your appendix removed, you don't run down Dominica and run back up Glover just like that. It really takes some financial adjusting. So the things that you probably would have been accustomed to doing, probably going out every Friday, probably traveling every year, you probably have to look at these things more responsibly and plan better. So the first thing after you've had your loan approved is to not fall back into reckless spending. Stay away from the bad debt, try to manage your credit cards, try to manage the payday loan places, and of course, live within your means. We cannot emphasize that enough. And if you know that building a big house would mean having empty cupboards, build a reasonable size house and have filled the cupboards. Agreed? Right. So some benefits of having a mortgage: of course, it's a very good investment. You have something to pass on to your children. There are tax deductions that you receive. I know most of us are very happy. I remember when I just started working, I went from first page to last page, and I was happy. I got that, I paid that in tax. But some of us who have student loans and mortgages, we love that middle page, where we can see what we're going to get back at the end of the year. And thankfully, with this new system, you get it back on your account during the same year. And what is NBD offering right now? We have one of the lowest rates on Ireland, the most competitive rate. And I tell people, please don't marry yourself to a rate because your mortgage is not a fixed equation. There are different things that factor your installment or what you probably will be paying at the end of the month. It's the rate, it's the value of the loan that you have, the term, all of these things. Right now we have a promotion for land and home where you can purchase your land, and if you plan to build within 2 years, you will receive the lower of the two rates because the land rate will be higher than the mortgage construction rate. But you can lock in the mortgage rate for the first 2 years if you plan to build at that year. You receive a moratorium on the principal payments, and what that means is that during construction, you only will pay the bank the interest on what is disbursed, which is good for you. And right now, I think you will speak to EMS who is downstairs. We actually have a product, it's not even a promotion, where you will receive up to $20,000 if you're interested in doing some hurricane work to your home to make your home hurricane ready, or if you want to go into some energy saving things like solar and these sort of things. So in conclusion, our purpose here is really to make you feel much more comfortable approaching the bank when you are considering your mortgages. We know sometimes it is not the most exciting place to go, but many of us, our team who is present here today, can let you feel assured that National Bank, we're really interested in you. We don't just care about the mortgage money, but in you and making your dreams come true. Thank you very much.